side with breaking news, live team coverage, and the Tri-State's most accurate forecast. This is Good Morning Tri-State.
And CPA Bill Hesch is here to run down some of the tax strategies you can use to avoid tax increases or fees that is expected with President Obama's revenue proposals. Some advice that could really pay off come tax time. That's ahead on Good Morning Tri-State. Cindy, thank you so much. With President Obama in office, there will be some tax changes next year and beyond that could impact your tax refund. Certified public accountant Bill Hesch is here to explain some of the changes and what you need to do now to keep more of your hard-earned money. And good morning, Bill. Welcome back.
Great to be here, Janelle.
Well, you know, overall, when we look at this, would you say President Obama's tax changes, are they going to have a real big impact on the rich?
It's going to have a significant impact on the upper income individuals because those taxpayers that he's defined, single individuals whose incomes are over $200,000, married couples over $250,000, that the maximum tax rate is going to be increased to 36.5% and 39.5%. So there's going to be some big changes there. These changes will begin in 2011. So you do have some time this year and next year, if you're an upper income taxpayer, to try to keep your income in the lower tax brackets this year and next year. There will be some planning.
What's going to happen with that? Because if it's, you know, just a couple of years away, what do people need to be thinking about doing now? Well,
particularly next year, because you might want to take income next year at the 35% bracket instead of being in the 39.5% bracket. So that's a good example. This year you want to balance out your tax brackets so that your income, you want to get in the lower tax brackets the best that you can between 2009 and 2010.
What about some of the low-income taxpayers out there? Now, President Bush, he gave lower-income taxpayers a 0% capital gain and dividend tax rate. But you say President Obama is doing away with that?
Exactly, and this is one of those things that you don't hear about, this tax break for lower income individuals. If you're single and your income is $32,000 or less, or if you're married, if it's $65,000 or less, you have a lot of lower income people who have lost their jobs, and they may have capital gains. And there's a special break that says that if you're in those lower tax breaks, if you have a capital gain, you can pay tax at 0%. So there's some planning for this year and next year for individuals in those tax brackets, which are the 10 and 15% tax brackets for 09 and 010, that you can accelerate and sell some stocks and you pay no tax.
And obviously contacting someone like you to kind of work through all of this really helps. Now, what about taxpayers? Because unfortunately in 09, a lot more people really have lost their jobs since 08.
Well, and this is really important because there's some tax planning involved there, because you may have gotten money in your IRA and your 401k, and if you're out of work, this may be a year that you try to take distributions out of your 401k or out of your IRA in 2009 or 2010, and that would be there for you to support your income, but also it may not get taxed as much because you have your mortgage interest and maybe other deductions, and so it may be to your advantage to go ahead and take distributions from your IRA and 401k. You have to be careful about the 10% penalty, but you may not be paying tax on the other income.
And quickly tell us too about the stock market, because it's continuing to take a hit, but quickly tell us what people can do.
Well, really you want to try to plan to have a $3,000 capital loss this year, or next year, so that you may want to accelerate selling some stocks, so that if you have a $3,000 loss, you're going to save taxes this year, and that can help then. And there's only one rule you have to be careful of is that you can't sell the stock and buy it within 30 days.
Okay, well, Bill, we are out of time, but we know you have many more pieces of tips and information on our website. To review these tax tips and more, go to WCPO.com. Once you get there, click on 9 links. We're going to have all this information posted after the newscast. Thank you so much, Bill.
Thank you, Janelle.